What's up? Welcome to Stephen Johnson Stocks. Minus 200 net loss month. A little bit more after fees, but it's a flat month, very small red month. After a catastrophic last month, I've made some changes. I'll go into them in a minute, but I've made some changes and I see this as a consolidation month, ideally to pick off in August for another green month. But I've made some significant changes to risk because it needs to be addressed, and I'll walk you through them. And more importantly, the way gap and craps are trading as of last month, the way I'm trading them, there is no edge. So probably the way I've always traded them will come back. There will be an edge, the old style, as the market runs in cycles, but I'd be a fucking moron not to adapt to what's happening now. And the way I've traded them this last month, I really feel like I haven't had an edge. And because I've not got great risk, and I'm trading without an edge, that risk management's been exposed and it's caused flat months, red months. But I'm not willing to accept that the reason I'm losing is fully on bad risk. It's not, because how did I turn $600 into $100,000? It's because I might have had bad risk then, but it never got exposed because I was always trading with an edge on my side. It's not hard to have good risk when you're winning all the time. But as the market's changed, my edge is diminished, my risk is exposed. That's how I see it. So I'm doing two things. I'm fixing my risk and I'm getting the edge back on my side, because good risk on a bad strategy is not going to work. Good risk on a good strategy, you're not even going to need the risk, but it's good to have for that every now and then. When shit goes wrong, you need your good risk. But the point is, it doesn't get exposed as much. I've got a good feeling I'm out of the woods. Never say never. It's been fucking terrible. The worst. I've nearly threw my mouse off the wall a lot of times. Lied in bed thinking, fuck my life, I'm going to have to get a job soon. So I've put some graft in, made some changes. I'm not repeating the same shit and just getting the same results. That's not me. I'm not that person. I'm not going to fucking complain and be like, oh, my life's so hard, it fucking sucks. I'm not. I'm going to fucking dig deep, grind, find the answer and come back stronger and make fucking more than the 15k months. Like, fuck 100k, like, I want to make more. But I've got to do the work. And I can't just add, and fuck even thinking about fuck the 100k, like, I just want to get the process right and I just want to repeat it. Like, fuck the money. Like, obviously the 15, 20k months will come back again, but I don't even care about them. I just give a shit about nailing a good process with good trades with risk on my side. Fuck my life. Okay, what's up, guys? Let's recap July 2021, but first we'll go back to June just for a little bit of context. 2nd of June was a wonderful day because I'd turned like $660 from January 2020 into over 100,000 on the 2nd of June with an AMC parabolic short. But it ultimately was leading to the perfect storm. So I just cleared 100 grand, 7, 5, 6, 7k weeks. I was pushing size and at the same time, over the last, maybe from this year, 2021, the market, coronavirus, it's been making the market extremely bullish. Volume and new accounts, an influx of new longs has gone through the roof. So long patterns have been more successful, and these gap and craps have been squeezing more and more and more and more, as longs have just been buying anything and continue to do so. So it was the perfect storm of me increasing size running well with gap and craps squeezing more than they've ever squeezed before, and a lot of them running not just one day and closing at highs, but 2 days and 3 days, which never usually would. Fundamentals of the company don't seem to matter anymore. And inevitably, despite I did have loss journals and some risk management in place, but not enough, and inevitably it caught up, like months and months of going from 600 drawdowns to 1,000 drawdowns to 2,000 drawdowns to 5,000 drawdowns, ultimately ended up in some pretty bad losses in a very bad month. So in this alone, I went from 103,000 up in this week, minus 28,000 puts us a third down on me profits. So in July, it was a month of just not even back to basics, like figuring out what the fuck to do, because I could continue trading with this style and I might make another 100 grand, but in this market, I don't want to risk it, because what if I take another 20 grand loss? then I'm down to 50 grand up. And then what if I take back to back two losses again? Then I'm down 30 grand up. It's just not a good strategy for me heart, and it's not a good strategy. You don't know long term what's going to work out, and I don't believe in taking risk reward trades that aren't on your side. And a lot of these were becoming like AMC. I was down like probably 6 grand to make 4 grand, like stuff like that, or 7 grand to make 4 grand up. Even worse. I don't want evens trades, like, so it's getting in bad habits. So when it comes to July, basically put the following rules in place. Auto liquidate at 950, and I've got auto liquidation. I won't be with a broker unless it auto takes us out of a trade when I hit a certain limit. Trade Zero and Cobra are currently brokers that provide this auto liquidate. I moved from Speed Trader specifically because they wouldn't give us an auto liquidation feature. So I've changed brokers first off. One of me brokers. Max size 6k per trade, because I don't think you should be taking more than 6k per trade ever. If you auto liquidate at 950, because you can auto liquidate too quickly, and I'm already struggling with that. I trade with hotkeys to auto risk $100. So basically, there's a great feature where I double tap on the chart where I want to stop out, hit the hotkey, and it will automatically enter me into the position with a position dollar amount of size, which is relevant to the stop, and it automatically puts the stop in. So basically, my position is auto calculated to make sure that when I hit the stop, it's $100 risk. So every time I get in a trade, I'm saying that's my risk. I want to get in here, hit the hotkey, the stop automatically goes in, and the position size is calculated to make sure when I stop out, I only lose $100. So every trade's $100 risk. So that's another thing that is important, because sometimes you lose 200 when you only wanted to lose 100. The fourth is I've set up a paper account, and the fifth is I'm looking into take gap and craps long. We'll go into them in just a bit. But so really, since I've set up this auto liquidation, I've hit max loss 4 out of 6 days. So this month was definitely an auto adjustment period, but I want the auto liquidation in, because I remember before this, I'd basically, after I went down $1,000, I wasn't allowed to trade again for the rest of the day, but I was allowed to hold a position. So on days like July the 13th, I got lucky and made 2 grand the next day. But there's some days like on XBio, which is coming up, that you could hold and be down 4 the next day. So July was very much a get used to new things. I'm adjusting. There's fucking teething problems, I can tell you. But in terms of paper trading each account, like parabolic, I shorted a parabolic and lost all my gains on that day. So I'll paper trade parabolics until I can paper trade them profitably. I've got a paper trade account now as well. When it comes to random longs, I'm not doing well enough. There's only specific long setups that pay for me. And that's this one, which we'll get into. I made a very small profit. Gap craps long I'm looking into now, but again, I've refined that even more. And again, I'll trade with 100 risk, what's working and what's not. I'm paper trading. And that's paper trade. And notes, I'm playing specific setups. If you do random shit, you get random results. But let's just head into the next section now. Okay, so on each of these tickers, those 4 tickers that I took, like auto liquidation, max losses I was taking out. XBio was just bad habits. It's generally always a gap crap, one and done. Comes up, comes down, one and done, one and done, one and done, one and done. But what we're actually seeing in this market is a one and done, and then it gaps up. And then it's holding for 3 days, then it's surged. It's like 3 days consolidation and surged. Very, very nice pattern. It reminds us of HPI, which is like surges, gives back but holds its range and surges again. XBio is a little bit cleaner for me because it doesn't like reward the shorts each time. But XBio would not be surprised to see this in the 8s, 9s, 10s in the coming days next week. But for old school shorts like me, for lazy shorts, it's a one and done chart. And even if it spikes and comes all the way up and back down, you're generally going to get a payoff the next day. So you get rewarded for bad habits. And back in the day, but not anymore. It only takes one time and you get screwed. If you hold, you get screwed and squeeze 20-30%. the next day. So at XSPI, it was a bit of old habit trading. I thought I was shorting into a parabolic. Still don't feel right after the max loss. That's why I've been putting these measures in, and I just got caught in too much of a squeeze, shorting too early at the start of a parabolic, not the end. And back in the day, maybe I would have got away with this. It would have come up and come down, and it's as simple as that. With SGLP, 52-week high, breakout. I took it long. I don't think I can see on the chart. Yeah, I took it long. It was a nice long. Sold, and then I wasn't sure of the direction, so I don't know why I continued trading it, because it's 52-week high breakout, which is long, but it was holding under VWAP intraday, which was bearish, and I should have just never been in it. I mean, it's fucking so stupid. And then lastly, HPI, and we'll get into that last, but HPI, again, it's staffed because, I mean, one of these days this is going to take off, but it spikes, fucks all the longs. Runs again, fucks all the longs. It's like a Momo in-out chart. One of these days, though, shorts are not going to get rewarded. It's going to hit the 12s, 13s, 14s, 15s. Wouldn't be surprised if they were planning it. But with HPI, it was another kind of long where took a nice long in the 1230s, was rewarded 1230 in time around the 8s, 850s, 9s, was paid into the 10s, 11s, started holding it for some reason, being like, oh, this could be the time. But I think if it's failed the last two times in history, doesn't repeat but it rhymes, what I'm famous for saying is you don't really want to be in it unless you've got a very good average or it's shown like seriously strong signs. If it starts failing, like, yeah, maybe check back after hours, but otherwise I think it's a bit of a dumb trade. And yeah, like the max loss that I took was getting caught in this. And it probably gaps down tomorrow, unless all of a sudden like news comes out and it kind of holds and rips. GLVI was the last max loss, and I used to play these for fun. It's like almost, this is a low volume resistant short, but pops, it hits the 9s, nothing but fades, gaps up. Anyone who's been buying in this area sells off. It's not got a lot of volume, so you'd presume, you'd absolutely presume that this is a good easy short from 930. So first of all, I'm going to show you how I traded GLVI in the old style of how I would short gap and craps. We expect bag holders. I've already got some shorts off pre-market. Typically what a pattern, a style that I'd always trade. Volume's a little bit high, but not like 15, 20 million. We've got 8 million volume here. Generally on this type of bag holder chart, I'd expect a pop and fail or like a fail before like 933, something like that. So we get I take a little short just before the open there, 620, risking around 640, just expecting this to fail. Now, very normal, 330,000 volume, 400,000 back in the day, 500,000. Yeah, you'd expect this would be the end. It should just fade off. This is pretty normal of how I'd expect it to happen. Normally I'd be in the 620s, covering 560s, 540s, and I'd kind of be done for the day. Just hit that cover, hit it back short again, because I think, oh shit, nah, I just got faked out. Back in the day, I'd fully expect that would be the end. I'm covering again because I'm like, this thing's not dying. Then I'm short again. And I think these losses are like really like $100 each. So I'm like 100 lost, 100 lost, 100 lost. So I'm like 300 down and the ticker's not even done anything. Then the final time I get out, short from the 6s and the 640s. Probably down about 350, 400, and the stock's gone the complete opposite direction. Again, like back in the day, this is a stock that is a like almost bag holder, high volume resistant short, and it's halted up and squeezing. Now, that is not a good position to be. I'm going to be very cagey here because I've already lost 400 and I don't want to lose any more. So These all do fail. These patterns all fail, generally, most, but they're failing a lot later in the day now. You see how I'm covering there because I'm cagey? These are like small losses again. Because I'm already down 300-400 and the stock is nowhere near. It doesn't look close to failing. It's just halted up. Short cover, just stupid mini losses. One final cover in the 720s. And then a quick short followed by another cover, and then I missed the drop. It's fucking stupid. So let us show you, based on a new system, how I'll plan to trade stocks like this in the future. So now get this. We're going to repeat GRVI, but I'm looking at going long in the mornings. Only if specific criteria is hit long. GRVI is one of the times. And then I'll be looking to short it later. Hindsight trading is always easier, but this is just to give you an idea of how I'm looking to trade. Because ultimately these fuckers should fail, but they're just not. So the first thing that I'm going to be doing is just not playing the first 10 minutes. I'm just not playing the first 10 minutes of any short because too many are reversing unexpectedly. I'd rather just let it confirm a direction and roll with that direction. Almost trend following. Shorting at the opens used to work fantastically. It's not working for me. It clearly isn't working for F1 Team Boss. You've just got to stop something that doesn't work. So 940 will be the first short trade I ever take. Like 938 if it's fucking definitely failing. But never before 938. Like really never before 940. So let's just talk you through this. So I'm not shorting before 940. But I will long around 930, 931, 932, 933 maximum. I'll not take a long after 933 unless it falls into a different criteria. The criteria on the long criteria on GRVI is also never along the first minute. I'm going long 932 or 933. And I'm only going long 932 or 933 if I see some sort of kind of wash in the first minute and then a squeeze. So this qualifies as a wash for me. We've got a nice opening minute wash. And I'm looking for something to come through the 615s, 610s, which I can risk low of day on. And I'm literally looking for a 5, 6, 7, 8 minute trade. I'm looking for shorts like me, shorting the first green day. Sorry, shorting the first opening minute. A lot of shorts like me, I've lost a lot of money doing this. Hang on, I'll just pause this now. I'm looking to basically go long where I would lose short and where I've been frequently losing short. So when this starts to push through, not quite there. If it starts pushing through like the 620s, that's something that I'd be looking to definitely go long on. Any more? Yeah, so I'm in here. 618, risking low of day 5. It's actually 590. And if I get stopped, it's fine. I lost, 3 times? And then it squeezed. I lost like, say, $300 losses. It's losing 300 anyway. So I may as well have one shot long for 100 loss. We'll just speed this up. Because you saw, I must have lost 3 or 4 times short this. So if we just speed it up with a long opportunity, we never get stopped. And that long goes from 615... $610 to $670, it's halted. I'm selling half. Any time there's 10% comes through, I'm selling. And I'll hold on to a piece because it's still not 940. I'm still not looking for that short. Let's try and get through this halt. Definitely selling the rest out. Up here. And then as we hit 939, I'm taking this short. I can see it's already halted. It's already parabolic. We've got 720, risking 740. The pattern is a pattern that should ultimately fail. We're just going to get a little bit of a squeeze first. So I've made 300-400 on the front side. It's 940. Looking to short. Probably just stopped out there. Waiting to see what happens. Hitting it again. Looks like it's confirming short. And then ultimately we get the dump back down without getting stopped out on the new risk, which would be 740. We're in another halt. And ultimately, like, yeah, you might have lost like 3%. You lost 3% once. No, you lost 3% once. Even if you'd lost 3% twice, you would have lost 6%. But if you're holding this for the day, you're making, let's see what roughly we close at, speed it up a bit. So I lost 6, so basically I won first time short, and I lost 3%, but it could have been 6% on the short. But ultimately, say we cover around the 570s, from 7 to 570, it's got to be about 13-14%. So you might have lost 6, but you made 14. It's an 8% edge, plus the long. And now, just to show you that this pattern happens more than once, and I'm not just like picking a random stock and being like, oh look, this is how I'm going to trade. Let's just check MDGS as well. I mean, it's confirmed it works on the pattern, but just to see how it might vary. So 9:30, we're not trading. Ideally, we're looking for a wash. And again, just to be clear, a year ago this would have spiked and dropped. The volume is weak, but 8 million pre. There's just too much interest in these stocks. So never do anything at the open. We get to 9:31, and I think if it breaks higher day, I'd take it. You kind of just want that next candle over going through or over the first candle. And again, we've got 9:32 or 9:33. I'm willing to take it, but I'm not ever buying weakness. I'm never dip buying the open of a gap and crap, because we've seen too many times what can happen. I can only buy strength because the setup in history has always failed. I just can't bring myself to buy weakness at the open on a trash stock. I have to be buying trash. I have to be going long where I'd normally be covering, buying. So this looks like it might roll through. If we get through 193, I'm in. But again, I'm looking to go long where I traditionally cover. Where I'm getting squeezed and taking drawdowns on the way up, I just want to go along them spots, because I'm consistently, with every ticker, losing on the way up. There's no reason why I shouldn't be making money on the way up instead of losing on the way up. Just going the other way. So this is the last chance. This is the last minute with MDGS. We really need something through 190, otherwise I wouldn't take it. We need a high over these two candles where they've kind of leveled. And this is going to have to put a big wick in if it's going to work. Looks like a short right now, doesn't it? Looks like a really good short. We're coming through this 190 level. If it hits it, I'm taking it. I'm long. Risk and lower day 180. It's 10 cents risk, 5%. Not bad. If you make 10 cents, it's a good trade. So to make 10 cents, I'd be making what, 205? 207? And if I get stopped out, it's fine. Like I would have got stopped once, stopped twice. I'd be trying to find the top stop 3 times. So even by just not taking the short, I'm making money. I'd be selling a bit here, just panicking a little bit that this isn't going to work. So you've probably got half off, yeah. And then the rest would be coming off break even roughly. But I do need to be more patient on longs, that's for sure. I'm watching the clock, because when it hits 9:40, I'm probably flipping short. I'm just trying to long the bit that I usually get squeezed. I'd be out, yeah. There's no way I'm holding beyond that. And I'm always looking for 9:40 to flip for the squeeze. I mean, I'm repeating, but I only want to take the long where shorts are getting squeezed who are early like me. because this is repeatedly happening. I'll just take these markers off. I'm not getting in me short because it's not 940 yet. Me long sells were early, very early. You're talking, my entry was 190, it's now at 225. That's like, I don't even know what it is, but it's like 15-20% on your long. This is getting a bit overextended. It is a terrible chart. The volume's nothing special. So like I say, when I tell you like 938, if it looks definitely like it's going to come down, I'm taking that short. So when I start seeing this wick and this trend breaking, it's 1 minute and 50 seconds away from 940. I'm taking the short risk in the high of the day. Just mark that back in. Definitely taking half off in this area. We've got like 240 down to 190. You might see us add back in somewhere around here. When it's holding around this area in the 1020s, I'm probably taking the rest off and I'm quitting. It would have been a mistake though. I don't like holding in this area. I would have probably been out if I'd had the conviction to hold. You would have had the long, which was like, I would have took 10, but it was 20%. And the short from 230 to 180 is like, fuck knows what, like 30-40%. But again, I would have probably took 10 or 15%. And if we just rapidly run through to the end of the day, you can see that I really lack patience on shorts. And from 240 to 170 would have been a killer short. Ultimately, I mean, that's ultimately covering the lows. We did get a bit of a squeeze, but still, if you start covering into this push 185 from 236 to 185 is like 50 cents on a $2.30 stock. It's like 20-30%. Now, there's only one other kind of long play that I'm looking at. And so if we just look at ERYP, pretty clean chart. This has great potential to run. It's got no real volume history. It's trading record volume. So this does look like it can run. As usual, I'm missing the first minute. Just speed this thing up a little bit. Avoiding the first minute, it just doesn't feel right to trade it. In terms of the second minute, the first candle's closed green. I'm looking more for a wash red to let the shorts in and then rip green. So the fact that this is open green doesn't really... It's not really what I'm looking for, and the risk isn't really there because if I take the long over 888, it would be tough to justify an 830 stop. But this pattern is very nice. So again, normally after 933, I'm not taking any long, but this reversal is so clean that it excites us. And this is the only, and I think I've saw this in 2 different patterns this month. This very clean long reversal is really something special. So if you watch this candle, you've got a decent wash, right? A lot of selling pressure. Look at the size of this wick forming. Look how much this wick's going to get bought up. Happens really quick. You see, like, there's a lot of people buying underneath this. So if it goes through 850, I'd go long, risking 810. I'll take that. And the specific reason why I'm taking it is a fucking clear reversal. When we're on a downtrend and this wick gets bought up all the way up, and then the next candle turns green, you know that shorts who are shorting this down are going to get the shit squeezed out of them. So this is another long I'm looking at taking. It's the only other variation of the pattern. And it ultimately has to lead to a short squeeze, which it does. So we've got the 940, and I'm not taking short till 940. So So we're at 938. We're going to come out of a halt. Because we've ripped up, if this immediately looks like it's going to slam, we're close enough to 940 where I'd probably look to take this short. It's just the first 10 minutes of the day. If I'm quick enough, I'd have a stab at that at the 940s. Selling straight out, getting straight in short. In a perfect world, it's tough. You have to be quick, but selling the long straight away because I don't really want to be in long positions after 940. And it's 940, so it's time to short. I'd be straight out of the long and straight into the short. Thank you so much for watching. It's and like I say, no jokes, no trying to be funny here. It's just these last 2 months have been terrible. It's my favorite thing in the world that I love doing more than anything I've sucked at. So again, you've seen the changes, you've seen the analysis. Comment below if you think that I'm on the right track. What your thoughts are. Thumbs up as always if you've made it to the end. And comment Long Johnson at the end. I'd just like to see who's made it to the end and who's still watching. Peace.